Hello everyone, I'm John Puthanpurakul. I'm the chair of the FIREL department. We support a variety of programs, undergraduate programs from finance, real estate, risk management and insurance, financial planning, as well as master's degrees in finance, MBA degrees, with a finance concentration, and a PhD in finance as well. One of the things we try to do is look at significant employers of students in our field and see how we can make them more competitive in that space so that they get hired by these big employers. And being in Texas and being in Dallas-Fort Worth, the commercial banking space was an obvious point of focus given how prevalent the industry is, how concentrated and how prominent it is in this state and in the city. Now, commercial banks come in truly in different sizes. You got JP Morgan, which is over $3 trillion of balance sheet. You got probably about 4 banks that are over $1 trillion balance sheets, maybe about 5 or 6 banks in the $500 billion balance sheet size, and then you go all the way down to the several $100 million balance sheet community banks, each of which serve different clienteles, have slightly different business models. The big banks obviously lend to bigger clients. They also have more fee income. They do investment banking, proprietary trading, while the smaller banks kind of more bread and butter, more focused operations. It might seem very easy from a point of view of what a bank does. They seem to take money in and lend money out and make a spread on it. You take deposits at 3%, you lend out at 6%, you get a 3% spread. However, there are a lot of risks that you got to manage within that. You got to manage credit risk. That 3% margin can quickly go away if one of your loans go bad and you take a big loss on them. So you got to manage credit risk, you got to manage interest rate risk, because as is happening now, the short-term rates are rising. So the bank's deposit costs are rising, but they've already lent out loans that are already been fixed maybe 2 years ago at maybe 5 or 6%. So they got to manage these movements in interest rates wherein their margins can get squeezed based on interest rate fluctuations. That's another source of risk for the bank. And then, of course, general business risk. You got to make sure that the economy is growing so that you can have a lot of demand for your loans and so on. So it's a very fascinating business, very important function it provides to the community. I think any student who wants to work in an industry of their field, I think they would find a very rewarding career. As an outcome of all our analysis, we decided we're going to focus on this commercial banking program at the College of Business. We are really modeling it after the Texas A&M's College of Commercial Banking program. Texas A&M's program has been out there for about 10 or 12 years. It's a place where all the major banks now seem to go to hire their entry-level talent. We thought it was a really good model to follow, and we're pretty much trying to follow that with a few tweaks, hopefully to make it more customized to our situation. Now, what we are planning to do, of course, is to partner with the local banking community to prepare our students for successful careers in banking. And we're going to do this through a whole set of curriculum focused on the banking space. We're going to have experiential learning through internships with the banks. We're going to have classroom instruction from professors as well as from banking professionals. We're also going to have mentoring for the students by senior bankers. So between classroom instruction, experiential learning, and mentoring, we hope to prepare our students to be competitive and ready for careers in banking. Now, in terms of the specific courses we are planning to offer in the program, Applied Topics of Banking is going to be the launch course. It's Finance 3600. It's being offered in the fall of 23. It has already been offered successfully twice in the past. That's going to be one of the classes that's part of the banking program. We're also going to have a bank management course. We're going to have a bank internship course, of course, and a class on commercial credit analysis, which we're going to try to use the materials of the Risk Management Association or the American Bankers Association. They have courses on commercial lending. So we'll have about 5 courses that students can choose from that are related to banking. And our hope is that if they can take at least 2 or 3 of these courses while they're a student at UNT, it would count towards the degree plan, whether it's in a finance degree plan, and would give them a real big leg up in terms of being competitive in the job market for this commercial banking space.